Welcome to the Money to Meaning podcast, where we're exploring ways to bridge the gap between money and our heart's desires. I'm your hostess, Amy Adler. Today, I have with me Jason Soman, business valuation and forensic accountant. Jason, thank you so much for being here.
Thank you, Amy, for having me. It's a pleasure to collaborate with you today.
Jason and I connected a while back, not too long ago, but we connected through Instagram, which it's always an interesting way for me to connect with professionals in the similar industries. And I saw Jason's podcast and I saw his postings online and really resonated with a lot of the things that he said because Jason is located in a different state. Jason, you're in Florida, right?
Absolutely. Yeah, we're in Boca Raton, Florida. We work all over the state and we work also all over the country as well.
Yeah. And so a lot of the things that you talked about on your podcast and in your social media presence, I really resonated with because I think you're really also all about educating people and helping people figure this stuff out so that they're prepared before they go into a divorce or during or preparing to get married in the first place. Really, quite honestly, this is what we hope people will eventually start doing, is educating before they even say I do. So, to get started, can you just share a little bit with our audience what your background is and the different services that you offer as it relates to divorce and probate?
Sure. So I'm a CPA by trade. When I graduated college, I didn't really know what kind of accounting I wanted to go into. First of all, I didn't even go into accounting to begin with, but then I figured that, I didn't have such great job opportunities when I first graduated. And then I was like, you know what? Accounting I was always good at accounting. It resonated with me. And then I was just like, you know what? There's good job opportunities with accounting. Maybe I'll just go into that and kind of take it from there. And then forensic accounting and business valuation just kind of fell into my lap. The first job that I got as an intern when I was in college studying for the CPA was in the forensic and valuation department of a regional CPA firm. So I never really had the chance to do regular tax accounting or anything like that. I kind of just went straight into doing business valuation and forensic accounting. And I've had that specialty since for the past 11 years now. It's been just about. And we handle business valuations, we handle forensic accounting assignments, and we also handle types of projects where there's a valuation involved, but people don't trust the numbers per se, right? So there's a forensic element to the valuation where the business doesn't show that it has any income or the books are a mess or things like that. So we handle, on our website, we have like a Venn diagram, right? So there's valuation, forensics, and kind of where those two worlds intersect. And we're usually answering questions of value or answering financial questions surrounding some legal purpose, such as a divorce, a state and gift tax transaction, a probate litigation, a trust litigation, or some type of civil dispute. But I'd say divorce is probably the overwhelming majority of what we do, only because these questions about valuation and accounting are often contested in these types of situations. I mean, what do people fight about? They fight about money. And when do people not trust each other in a divorce, right? So it's so common, and that's just kind of uh, why we end up doing so much of our work in the divorce arena.
Yeah, and it's an emotionally tough arena to be in, and yet super interesting because we always get to delve into the inner workings of people's personal lives and their financial decisions. So that's always a fun little side effect of the work that we do in the divorce space. So, why would you kind of already touched on this a little bit, but maybe talk a little bit more about why would somebody ask for a business valuation or a forensic accounting project in a divorce case?
Yeah, so I like to make the analogy of we're pretty much just like regular accountants, except it's income statement and balance sheet, right? Balance sheet being what are the marital assets and liabilities, and then income for what is their income available to pay alimony or child support. So when we're talking about assets and liabilities, oftentimes a privately held business is a big asset, right? You could have a couple that's worth $2 million and 1.5 million of that is a privately held business. Privately held businesses are difficult to value because I can't just look up at Fidelity and see what they're trading for. They're very unique, and also the closely held nature of them. They kind of tend to be alter egos of their owner, right? I mean, people will consistently put business expenses on their personal cards and personal expenses on their business. So a lot of times there's an untangling, especially as it relates to closely held businesses. Then when we get into the question of what's their income, there's a lot of different complexities as it relates to a business owner's income, right? Like if you're a W-2 employee, it's very easy to figure out what your income is. The same concept when you're dealing with the business owner's income, there could be personal expenses that could be depressing income, so their real income available is higher, right? There could be fluctuations. There could be, if you're a construction worker and you just finished up a big project, maybe your income is showing a little bit of a spike, but that's not really what your recurring income is. It's just a one-time thing, right? So looking at those types of things with the business owner can be very complicated. And quite frankly, there could be a lot of subjectivities that go into that. So oftentimes we get called in from a divorce. Usually we get the call from the divorce attorney and says, I have a case. I need to know what the value of the assets are. I need to know what the value of the income is. Um, also I should mention expenses too, right? Income and expenses, profit and loss statement. So what is the marital spending? How does that work? Is there even a need for alimony? In Florida, your alimony is determined the lesser of the ability to pay or the need, right? So in Florida, there's no savings component. So if you have someone that makes $50 million a year in income, they're not going to have to pay any more alimony than what their receiving spouse needs, right? So sometimes cases turn into what does this person actually need? So it really depends, and sometimes we got to get involved and figure out where the levers are, right? Because sometimes it's all about what the business is worth, right? Because we put everything on a chart and we see, okay, well, this marital estate and this division of assets and liabilities is super sensitive to what the valuation is. And sometimes the valuation doesn't really matter that much, right? Sometimes it's not a big deal, and sometimes it's all about the alimony. Or sometimes in a situation where there's a very high income earner, it's really what is the need of the person that's receiving child income or child support. So it really depends what the issues are, but I'd say broadly speaking, it's income statement, balance sheet, where are the assets, what are they worth, what's the income, things like that.
So that, yeah, that's the business valuation. And then sometimes you are pulled in to do forensic investigations, right? In the divorce space. When might you need to do
Yeah.
that?
So the term forensic, I mean, forensic just means like suitable for the court of law. So sometimes people think of forensic as CSI or I'm doing some type of investigation, and sometimes we are, quite frankly. But a lot of times forensic is really just preparing an analysis of these things, incident to a divorce, and having that analysis ready to go in court, potentially. Where I am in Florida, we often get called in for hearings on like temporary alimony or temporary support issues. So we are in court, quite frequently to testify to these issues and help the judge understand. Because as expert witnesses, our testimony is evidence, right? So it's evidence that the judge could consider. Also, there's only so much time that we have to communicate these complex financial issues to the judge. So sometimes attorneys will look to experts to succinctly, go through all the facts and explain it to the judge in a very efficient manner because sometimes they only have 30 minutes to go over issues of temporary alimony. So that means that your side may only have 15 minutes, right? So you have a very short amount of time to accomplish a lot. Then there's also the element of sometimes the attorneys will have a case where there's complex finances, there may be a business, and a lot of family law firms are tend to be kind of smaller, right? They're smaller type of firms. So sometimes people will just outsource part of the document discovery, right? Instead of the attorney preparing an information request, we may prepare the information request. They may look to us to say, what documents do we have? What documents do we need to keep going? So that's a big part of our business is just figuring, like I always joke, like half of what we do is figuring out what documents we have and what documents we need. I mean, it's very unsexy, but that's, forensic investigation sounds really cool, but a lot of the time it's really just preparing a work product and analysis of financial issues to go that's ready in court. And
Yeah.
sometimes we do, sometimes we think that someone's not reporting something correctly. We'll quantify those things and we may go to the court and explain that, look, we have a Wells Fargo account and we see payments to Bank of America and this is how much has gone and we've asked the other side for Bank of America 5 times and we haven't gotten it and I'm going to explain that to the judge. Um, but usually
So
it's
it
like
sounds like there's a lot of stuff in your job that's occasionally not as sexy and fun, but
of
there's some
course, of
things that are
course, of
just
course.
you're just
It
you're just confirming what the parties are saying. So we're sometimes just used as like a neutral third party expert that's able to verify what somebody's saying. So that's helpful to know too, that that's a value, or some of the work that you do in your practice. So let's talk about some of the sexier things now that we've talked a little bit about some of the less stuff. What was it that made you decide to leave the safety of employment by a firm to go into business for yourself?
I always had the itch and like I don't know, I always had a way that I kind of viewed the world and I felt like that, if I want to change it, I got to kind of be in control, right? Like it's if I wanted to shape a firm that was the way that I wanted it, to do the marketing the way that I wanted it, right? Like we're podcasting right now, right? Like I would not be able to be per se, I'm sure I could, but like I'd have to get it approved and things like that. Like I feel like there's a new like culture coming to like the new age accounting firms and there's a new way that people get business and it's not like the old way that it used to be. And I just felt like I was getting that point in my career where I kind of like maxed out the opportunities as like a doer, right? And I just wanted a chance to develop a business for myself and not do it on behalf of, not do it for a firm and kind of do it my way where I could put my own personality into things. So, I had a young daughter and I was like, she's not getting younger, she's not getting cheaper. And, I have the experience to, I was in the industry for about 10 years and I have the experience, I was handling projects on my own, dealing with the attorneys, things like that. So I said to my wife, I'm like, now's the time. And I dove off the diving board. And, had I known everything that went into it, and how scary it was and how uncertain it is, I think the hardest part is just how uncertain it is. You don't know when your next project's coming in. You don't know when you do bring that project in, when the client's going to pay your bill. There's a lot of unknowns. Had I known
So even
everything, I
though,
don't know if I would have done it.
Jason, even though there's been a lot of unknowns, because you really just kind of identified some of the scary parts of being a business owner, which is really helpful. How has the decision actually improved your life?
Oh, I mean, I would not go back after going through some of those times. I don't know that I would ever go back. I mean, like for example, like I'm taking the afternoon and Halloween off so I could take my daughter trick or treating. Like I don't have to ask anyone what to do. I don't have to get approval for things. I'm able to develop business in a new way that I don't feel like I would have necessarily been able to do at a company. You also, when you work for yourself, you don't have to, when you're an accountant at a CPA firm, the CPA firm is essentially a middleman. paying you a salary and they're charging you to clients and they're taking a middleman. So I don't have to pay the middleman anymore, right? So
Right.
I could work less and make the same, or make more and work um, so that's been great. Um, but
Yeah. The
it's
eat
not
what you kill
without
is the eat what you kill idea is really very sexy, like desirable.
yeah,
I think a lot of people want that now because they're realizing just how much they're giving up by working for bigger employers. Yes, you have the safety of being able to have somebody else do the advertising for you and all of the administrative accounting services, the HR, all of the things. But nothing compares to being able to eat what you kill and being able to design the business to run the way that you want it to run. Is there's that freedom there that I think a lot of people are really scared of, and that's why I wanted to ask you that question and have that be talked about on the podcast, because I think more and more people want to be business owners and are just terrified of making that leap because of the fear of that lack of financial stability. So it's great to hear that it's been successful for you. It's definitely been a successful experience for me. And so I think, this is encouraging for other people to help them have hope that they can make it work too, and that it is worth it and not as scary as it seems. So that's awesome. Thank you for sharing all that. So, do you ever work in your practice with other consumer financial professionals like financial planners, realtors, any mortgage lenders, insurance agents, bankers, other CPAs like the ones who do taxes, any of that kind of stuff in your practice as you're doing business valuations or other financial forensics in the divorce or probate space?
absolutely. So, like I said, you never know on what case on a case what the issue is going to be, right? So sometimes the issue is we need to figure out how this person could keep the house and refinance the mortgage or something like that, right? So um, I have a buddy who's a divorce mortgage planner, right? So sometimes I'll call him up and he'll say, oh, well, they could effectuate the buyout this way. There's this option, and then there's this other option, and maybe their loan's assumable, and they could, switch the paperwork or something like that. Um, Also, sometimes we just run into questions, right? Like if you're dealing with a complex valuation and there's some complex loan covenants, right? Like I may contact my bank, one of my friends who's a banker. So I think that this work it's extremely diverse. The issues could really range. And sometimes I don't consider myself really um, like an expert in everything, but I feel like as a forensic accountant, I have a good ability to figure things out as I need to and learn things and become experts in things so I could help get things over the goal line. So I think that having that network is really important, and having the humility to make sure that, I'm not trying to act like I know everything to my clients. I just need to stick to what I'm an expert in and make sure I have a good network of people that I could reach out to. And sometimes, I may reach out to another forensic accountant like yourself and say, I've never seen a case like this before. Have you? So like you said, there's no shortage of adventure in this field, and there's always something new.
It's so true. So, can you talk a little bit about maybe an example of what you might need or work alongside a real estate agent or like a financial planner specifically to do? Like, how can they learn how they can be helpful in the divorce and probate processes?
So, real estate agents, I'd say most of the time the divorce attorney will reach out to those people. So we get the you know, the family law client will usually come to us through the divorce attorney. So we like to respect that like referral pathway type of thing. But sometimes a financial planner for sure, because a lot of times people are getting a sum of money in their divorce, and that money is going to need to offset some of their expenses, right? So if someone's getting $1 million and they're 60 years old, how long could that $1 million last them? How much is that $1 million going to grow through when they're expected to live versus what is their monthly expenses? We don't tend to handle investment advice. We don't do that type of thing. So oftentimes, especially folks that may have assets but may not have a recurring income, I will usually tell them to consult with a financial planner to see how they can make their money work for them. I think it's a very smart idea, especially when you don't necessarily have an income or that income is not so certain.
Yeah. And so I suspect that you've run into similar situations that I have with some of those folks that they don't have a lot of background knowledge or information about marital property and understanding community property and separate property because they don't have that CDFA training or the forensic accounting training that we have. And so you find yourself having to explain a lot of that to them so that they can help and actually be more supportive and helpful in and after the divorce process for their clients.
Yeah, I find that a lot of times in divorce cases, there's one party who has a lot of knowledge of finances, and then there's another party who is kind of now they have to be in charge of their share of the finances. And it's a very rude awakening sometimes, for lack of a better word, because there's a lot that goes into it. There's a lot of knowledge that they may not have picked up. They probably got comfortable having their spouse manage things for them. So I think it's really important that they get that financial education, whether through a financial planner or reading online. But I always think it's a good idea, especially when you're dealing with something as important as how am I going to pay my expenses and have enough money. I think it's worth getting some type of professional help when it comes to answering that question.
And that's a huge pain point for a lot of my clients in the work that I do. That's not as similar as yours. When I do the CDFA work, a lot of my clients are just terrified for their financial future. So yeah, you bring up a good point there that when we're talking about the spouses and their lack of knowledge and understanding of finance in general, much less community, separate property, marital property, all these legal terms around their money and their assets. And then the financial planners, even too, the financial planners, the real estate agents, the insurance agents, like they often also don't understand or know much about the rules, especially if they work with people in different states, because like you mentioned, that Florida doesn't pay attention to the savings or assets in determination of alimony, but Texas does. And that's a big factor, especially when you're talking to a financial planner about helping their clients or about using them to get information to prepare for the divorce process. So I think you just brought light to in this conversation both sides of the coin here about the importance and value in educating both the spouses about their understanding finances and about the laws in the states that they live in, to give especially the non-financially savvy spouse some peace of mind about their financial situation, that they're going to be okay. And then also to be able to educate the professionals so that they can be able to help their clients earlier in their lives so that they're not in this divorce process feeling scared because they are uneducated. So thank you for that. That's really, I think that's really helpful. You're illustrating some really valuable points here. So why don't you tell me a little about a couple of exciting cases that you've worked on? Give us some juicy stories.
I mean, we've had cases involving, hundreds of businesses. I mean, I get a lot of joy out of, and I guess what's exciting to me is looking at a case that's just kind of a mess, right? And it's highly contentious, and we're able to kind of figure out everything and come to some resolution. So I get a lot of joy out of that. So to me, that's exciting, is taking something that's very chaotic and turning it into something that everyone knows what's going on from previously when it was a mess and chaotic, and we're able to come to some resolution, and these two people are able to go their separate ways. So I've had divorces with over 100 companies, and we were able to settle every single company and come to a resolution. And when we started, I was working for the spouse who had the assets, and the other side thought it was like hundreds of millions of dollars. And we ended up coming to a number that was what we believed to be the truth, and it was somewhere closer to like $8 or $10 million. So I felt like we were really able to add a lot of value. Um, I've had cases where we found, through the being very diligent about what documents we have and what we need, we're able to find hundreds of thousands of dollars that weren't disclosed to the spouse, and we found it by getting a subpoena of the mortgage company and finding out that there was an extra account with several $100,000 in it. Um, a
With the
lot of time,
mortgage company?
well, yeah, because people try to look good in front of their lender. So they'll show all the positives about their finances. But when they're getting divorced, they tend to do the opposite. So, we saw the finances without those positive attributes, and then when we sent this through counsel, we sent a subpoena to the mortgage company, and we found hundreds of thousands of dollars. Um, I've unraveled, schemes where people have you know, moved money around via like accounting journal entries and have unraveled what the real finances are of a business. And we've had that because, like I said, we do a lot of valuations where forensic issues are at play. And through my diligent forensic accounting work and looking and figuring out personal expenses and following the money, we were able to add hundreds of thousands of dollars and sometimes millions of dollars of value to a company based on our diligent efforts. And, in the process, exposed the other side for not telling the truth, right? So that adds a little bit of extra leverage in order to help settle a case.
There's an extra layer in that part too. When you describe personal expenses in the business as being expenses, if they're filing tax returns that way, that can be considered tax evasion and can cause big issues with the IRS on top of the divorce process. So that makes for a really big area of concern for the spouse who's not the business owner there about needing to start looking into innocent spouse exemptions or getting compensated some way for the risk that they're under with the IRS for all of that.
Absolutely.
That's always a fun one to deal with. That's so I don't do business valuations. My company doesn't do business valuations, but we do oftentimes support business valuation experts with some of that kick the tires work and verification work that you were just referring to make sure that the books are clean and are reasonable so that the business valuation is done based on reasonably accurate numbers.
And
So
it could add a lot of value too.
totally, absolutely, it does because a person's motivation without considering divorce when they're running a business, and we are both business owners, so we understand this motivation is to record as much expense as we possibly can. So we know that going on vacation can be a legitimate business expense if you do something business related on that vacation, travel, right? So then that can make a good chunk of, if not all of the trip, a reasonable write-off. But then it's in the business expenses. And so then the question comes, is that a reasonable business expense, or is that just reasonable as a business expense for tax purposes and shouldn't be considered for the business valuation? So really, I guess I'm bringing up some other issues that can be contentious and cause the need for court to make decisions sometimes about these things because it's really subjective.
Absolutely. Like, how do I know? It's very hard as a forensic accountant sitting behind your desk what you did in Las Vegas. Like, were you at the conference or were you at the gambling table? I mean, I don't know. There's gray area. It may be both, maybe 50-50. I don't know.
Exactly. So, but if you traveled to Vegas and went to a conference and at night went to gamble, you could still write that off. So even if you had a good time. So yeah, it's a really interesting situation. So all of the expense and pain associated with the divorce has caused younger generations not to want to even get married. I mean, a lot of the things we've talked about have been the pains that Gen Zers see their parents' generations going through and are like, I don't even want to touch getting married. at all. There's no reason to do that if I'm just going to end up getting divorced and be in this miserable, expensive, and broke situation after it's all said and done. So I created this life transitions finance professional training program in order to educate consumer finance professionals like the financial planners, real estate agents, the folks we were just talking about in the finance space about the pitfalls that people fall into in the divorce process so that they can be in the know and advise their clients in ways earlier in their lives, the Gen Zers, all the people, whoever has not yet gotten married, about the pitfalls so that maybe they will still consider getting married if they want to and just make different decisions based on what they understand the laws or the way that finance works in the state that they're in if they were to end up in the divorce process down the road. Because we see so many clients in anger and fear and anxiety around their financial future. It seems like we have to stop this. You've probably spoken to attorneys much like I have who just say to their clients and to us, yeah, that's just the way it is. It sucks. It's unfortunate. Yes, you're not getting a fair deal, but that's just because that's the way things are, and we have to go within the bounds of the law. So why should we continue to accept that? We shouldn't. So, Gen Zers and the younger folks are not wanting to get married. That's their solution, but maybe there's a better solution. It's just about education and empowerment so that people can take control over their own decisions. And so there's lots of ways to go about that other than just not getting married. So that's why I created this training course, is to help these finance professionals be able to educate their clients and advise them earlier in their lives. What are your thoughts on the benefits that professionals in those roles might be able to get out of a training like that?
One thing that I think is important is just understanding that if you don't have planning for this area, you will, like, people always, like, I hear attorneys say this all the time when they're talking about prenups. They're like, well, if you don't get a prenup, you are getting a prenup because you're getting it from the state and what the state laws are. So this is your opportunity to kind of plan. Um, I think it's important to plan, just like, you get life insurance and you plan to live a very healthy life, and you still go to the gym and you still exercise, but you still plan for those unfortunate circumstances that may arise. I think that you have to do the same when it comes to marriage. I also think that oftentimes, there is a reason why sometimes the laws are what they are, right? Like, if someone stays home and takes care of the kids, they forego a lot of opportunity, and you're kind of committing to be in this together. And I think that that's also something that oftentimes the person at work sometimes doesn't fully value, but that is extremely valuable because the person at work may not be able to achieve that level of income or achieve that level of asset accumulation without the support of their spouse. So, as someone who's married and started a business, I have to give a lot of credit to my spouse. So I think it's important to, take a step back and say, well, this is a team effort. I do think that being married is a wonderful thing. I do think sometimes divorce could also be an awful thing, but it doesn't mean that you should never get married. Just like you wouldn't never drive a car or get on a plane only because there's a risk of getting injured, right? Like, sometimes you gotta sometimes go with, go through life, knowing all the risks. Um, Something that I see very common is inheritances, premarital property over long-term marriages where people don't have the records and people are not keeping good records of these big financial events where in the state of Florida, these would be considered a non-marital asset, but they mix the money up and it becomes untraceable, or they can't prove the records that this account today was the account that it was 20 years ago. So I think one thing that financial professionals could do is help advise their clients to document these large life events, such as inheritances or getting married, because if you document it, then you may be able to prove it later, even if you don't want to go through a prenup or all these things. If you could document what you had when you got married and maybe just continuously update your records throughout the marriage, I think that would be a great thing because I have a lot of clients now who they're getting divorced and they could only get 5 or 6 years, maybe 7 years from the bank, and it's a 20-year marriage, and there's 13 years that we need to prove something, and it's very, very difficult, and it's a tough pill to swallow for
Yep.
both the spouse that is would have to pay out a part of their inheritance or a part of their premarital property. That could be a very emotional thing for the person who has to make that payment because, um, you know, they lost a loved one, let's say their parent died or something, and they have to give that to their spouse. That's very upsetting to a lot of people.
For
Also, on the
sure.
other hand, the other spouse may not know all these details, and they just know that today there's this account that's worth X dollars, and they may feel, well, how do I know it's not the same? So I see both sides of it. So I think with those major life events, such as an inheritance, or if you've accumulated a lot of money going into a marriage, that you document those types of things.
I
I
always
see
tell my
that.
clients that your marriage is going to end one way or another, not just my clients, but people in general. Your marriage is going to end one way or another in death or divorce. And as morbid as that sounds, either way, you need to know where your stuff is and what your stuff is and what you've got. So, understanding these things at the beginning of a marriage or early on and keeping at least a tabs on or being in the know about things throughout the marriage is valuable, regardless of whether you end up in the divorce process or not, because somebody is going to pass away at some point and you need the information then instead. So, many, like, we didn't really get to talk much about probate today, but a lot of the things that you talked about apply in almost the same manner in a probate situation as they do in divorce. And so I think it's all really important to make sure people are just more educated and knowledgeable about their money and about what they have and what they want and what they need. So thank you, Jason. I really appreciate you taking the time and for your candor in this conversation today. I think it's been really helpful, and I really enjoyed it. So I would love to give you the opportunity to share where people can find you if they're in need of business valuation forensic accounting services in the state that you're, or states where you're licensed.
Absolutely. So if you'd like to reach out to me, my website is www.divorceforensicaccountant.com. Very easy and to the point. And on our website, we have all the contacts information where you could reach us, where you could book a consultation. We also have some blogs and some links to some information if you want to listen more or read more about our firm. And it's been a pleasure, Amy, and I appreciate you having me on this podcast. It's been a lot of fun, and I hope to do another one sometime in the future.
I would love that. Thanks again, Jason. Hope you have a good one, and let's be in touch soon.
Thank you.